record this in chunks here, make it a little bit more manageable. Okay, so corporate formation and filing requirements. So first off, in order to be a corporation, you have to incorporate with a state. And in Iowa, I think I did show you this website a while back, you have to go through the Secretary of State and you have to fill out, so business entity forms and fees. Here we go. So if you wanted to form, let's just say, a domestic profit corporation, you are in it for a profit and you want to form a corporation, you would then file this form, Articles of Incorporation. Now there are certain requirements that go along with being a corporation. You have to have like a board of directors, and that board has to meet once a year. Now, oftentimes with small corporations, we're talking about 1 or 2 people, but you do technically have to meet, and you have to have minutes of what was discussed. So it's kind of weird if you're the only person. Obviously, you're just doing that on your own. But that does have to be. There are certain requirements, and those are state requirements. Those aren't IRS requirements. Those are requirements with regard to organizing under the state laws. So it costs $50. Let's see. And then here it just takes you to the code section. It's not a template for the Articles of Incorporation, but it tells you, this is an excerpt from the state law on how to incorporate. So these are all the items that would be needed in order to form a corporation. And once you do that, then you're a corporation. But you do have to fill out an SS4, which is the form to apply for an EIN, which you would need as a corporation. I don't want to go there. I don't really want the online application either. No. IRS. There's PDF. So this is the form that you would then fill out with the name of your business that was matching the name that was incorporated with the state, all the address, name of responsible party, the responsible party's social security number, or EIN. What kind of entity are you? So if you're a corporation, you would click corporation. What form are you going to file? 1120. Now that's important because when we talk about S corporations, you're still a corporation. It's got the word corporation in there, but you'd be filing a different tax return. So that's why they want to know what that is. And then all of the information. So why are you applying? Oh, we started a new business. Okay. And then you would give all the information about the business, what business you're in, what you plan to do. So you would file, this is what you would file with the IRS, so that the IRS then knows, okay, a new corporation has been formed. It's a C corporation. So we would expect to receive a C Corp, a Form 1120, when that form is due. And so that's how you kind of get it all started with the IRS. But with the state, you go through the Secretary of State's office. So there are 2 parts to this. There's the legal part, which goes through the Secretary of State, and there is the tax part, which goes through the IRS. So that's how you incorporate. It's really not that difficult a thing to do. It's fairly simple, it's fairly straightforward, but corporations usually have bylaws, which are just the guiding principles of the corporation, how everybody's going to act, and then those articles of incorporation will indicate who are the incorporators of that corporation. So the individual or other entity, so it might be somebody other than an individual that forms the corporation. Now we're talking about subsidiaries, right? So it could be that I'm a corporation and I'm going to form another corporation. So that my corporation A is an incorporator of my corporation B. So that is entirely possible. But then, like I said, you've got to register with the state as well. You mentioned states require corporations to file an annual report. That's where that you would say that you had your annual minutes, and you have to pay a fee, and you have to pay an initial fee as well as a fee every year to and then if you have any changes, like you decide to terminate activities, you would have to file some sort of notification. I think that's here so I think it's a dissolution, articles of dissolution, so you're dissolving. If you're merging, you have to let the state know. If you're making some change to your articles of corporation, all that stuff has to go through the state. Now, corporations, what we've talked about so far has essentially been a cash basis of accounting, but corporations do generally use accrual accounting if they have annual gross receipts over the last 3 years of 26 million or more, or of more than 26 million. So less than that, they can use the cash basis. More than that, though, they have to use the accrual basis of accounting. So remember, one of those expense items that we talked about that we don't usually use is bad debt expense, because if we're not using accrual, if we're not accounting on the accrual basis, then we haven't recorded any income that we haven't actually received, so we don't get bad debt expense. But with the case of corporations, where they have more than $26 million of average annual gross receipts over the last 3 years, they would use the accrual method of accounting. They can use the accrual method if it's under that as well. But then they would be able to use that bad debt expense. That's just kind of one example of a difference there. Also, we talked about how individuals are on a calendar year basis, right? We go from January to December. Partnerships as well go from January to December. Corporations don't have to do that, though. They do not have to go from January to December. They can choose a different tax year, and it can match their fiscal year if they want. So, for example, there are a lot of entities out there that have a different, their annual reports are on a different schedule than a calendar year. Maybe they go from November to the end of October or the end of September. A lot of times especially entities that do business with the federal government, if they get a lot of funding from the federal government, they'll try to match the federal government's fiscal year. So they may choose to have a different tax year than the January to December calendar year. So that's one difference, is C corporations can choose a different tax year, whereas individuals and partnerships are using the January to December. They have to use that calendar year. So a lot of retailers, they mentioned here, a lot of retailers will wait until their fiscal year will end January 31st. Well, why is that? Gosh, they want to get through the holiday season and maybe any returns in order to, so that it just makes more sense for all of that activity to be lumped together in one year. Disney, their fiscal year end is September 30th. So their tax return would indicate a year of September 30th. So corporations, because a lot of them do have a different fiscal years than the calendar year, they are allowed to match their tax year to their fiscal year. It doesn't have to match, but there'd really be no reason for it not to match. But it makes more sense for it to match. So, as I mentioned, the C Corps file a Form 1120. The 1120, because we have different fiscal year ends for C corporations, we may have different due dates for the tax return, because the due dates, so the due date for a C corporation depends on the fiscal year. If their fiscal year ends on June 30th, the return is due September 15th. So that's the 15th day of the third month after year end. So there's a difference here for these June ones. And a lot of those nonprofit organizations are also corporations. So they fall under the corporate umbrella, but then they are choosing to be taxed as a nonprofit organization. Of course, they have to meet a lot of stringent requirements as well in order to do that. But they have, a lot of them will have a fiscal year end of June 30th. Other corporations' initial filing date is the 15th day of the fourth month after the fiscal year end. So, for example, so the June 30th folks are the only ones that have a special requirement. 15th day of the fourth month. So if you are on a calendar year basis, December 31st is your fiscal year end. The fourth month after would be April, January, February, March, April. The 15th day of that month is the 15th, April 15th. So it'd be the same as individuals that have that due date. But if your fiscal year end is January 31st, then your due date for your tax return is May 15th. So it's always going to be the 15th day of the fourth month. So essentially you have 3.5 months to file that tax return. You can get an extension though. Okay, so you can have a 6-month extension from the original due date. So that would mean that if you take advantage of a full extension, say your due date is April 15th, and you take advantage of a full 6-month extension, your return wouldn't be due until October 15th. Okay, just like individuals would have the same requirement. Okay. Let's see. So we already looked at the tax return here and what it looks like. Any questions about any of that? Okay. Moving right along.